Right, got the tweet out. What's up, everybody? How's everybody doing? Oh, Calvin, nice, dude. I'm happy for you. That's awesome. What's up, Kevin? Robbie, how's everybody? Hope everybody's having a good weekend. Give it a few more minutes. See how many more people we can get in here. Guys, go ahead and, if you're on Twitter, retweet the tweet I threw out there. See if we can get a few more people in here for the live stream. We'll start in about a minute and a half. Got a pretty good list today of stuff to talk about. All right, Josh. What's up, brother? Just don't get in trouble at work. Don't get in trouble because you were watching a live stream. Yeah, that's when being the boss comes in handy, right? Hey, what's up, KH? Not sure if you are referring to like just from YouTube. You didn't get a notification. If you need notifications about the stream, make sure that. Oh, I'm not sure what you mean then. How to get added to the mail notification. All right, guys. So let's just jump right into it, so I can get back to my weekend. Guys, it's Ricky here, ready to do the Sunday prep. This is for, what is it going to be? June 27th is tomorrow. So it's the last week of June, and then we're going to head into July. Remember, the first week of July, next weekend, actually, it'll be a long weekend, right, for 4th of July. Housekeeping, of course, guys. If you don't have a broker that you can trust, I don't know what you can't be taking this serious. If you're serious about this as a business, as a way of paying your bills, you got to have a broker you can trust. Cobra is the go-to broker for me. I've been with them for a few years now, and like I will never leave Cobra. I'm telling you guys. I've been with so many brokers. Actually, I still am with so many brokers. There's only one I trust on a day-to-day basis. It's Cobra. There is a link in the description if you want to try them out. It's going to get you a month of free platform, whether it's DOS or Sterling, and you'll also get 25% off your commissions. Spikeet. If you don't know about Spikeet, these guys make a product that allows you to pull historical stock data, so that if you're one of those guys that wants to figure out, is your edge legit? Do you see a setup that you think might present itself an opportunity, but you need to get data to test it? Well, there's a few ways to do it. One is by manually tracking data, and that can take a long time, right? And as somebody clued me in last week when I said this, yes, you can code in Python and you can pull the data yourself, but if you're not that good at coding, that could be pretty daunting, right? Spikeet makes a product that makes it so you can do it without being like a great coder or whatever. I mean, honestly, I'm pretty good at Excel, but that's about the extent of my coding, if you can even call it that. But it makes it so you can cast a wide net and pull yourself a really large sample size, so that you can actually determine whether you have an edge immediately. You don't have to wait for a few months to go by for you to collect enough data points to say your sample size is significant. And honestly, I don't even know what I would do without the ability to do that, right? And Scriptstotrade, these guys create indicators for Thinkorswim and TradingView. They have a whole suite of already created indicators based on everything from volume to gap stats to, like you name it, they've got it. But if they don't have what you want, if you envision some sort of indicator, these guys can create it for you, and they do custom work, and they're amazing to work with, guys. They're fast, they're accurate, and they know trading, they know markets. So when you talk to them, you're talking to another one of us, right? Which means your ideas are understood. All right, and so earnings this week, there's a few notables. There's Micron. Nike is after the bell on Monday. There's Bed Bath & Beyond, which who knows if it's going to be something that moves the needle or not, but it's a meme stock, and you know how the memes are. Walgreens is in there, but other than that, really not a lot. And the fact that we're actually like at the tail end of earnings segues perfectly into the topic I was going to touch on today, okay? And that is what to do when things slow down. So you guys hear me talk all the time about the importance of having a system and defining every piece of it, right? You need to absolutely define your system black and white, if this then that, and you need to know like what makes a good candidate for your setups. And the reason I'm bringing that up again is because when things slow down, and I don't know if things have been slow for you guys or not, it's really going to depend on what your setup is, right? But for me personally, what I trade on every single morning, the setups I trade, they've been very slow. Typically they'll be anywhere from 7 to 15 trades that present themselves every day in the first 30 minutes, and these are just emotional moves in the levels on liquid large caps. They just had last week, even though it was a 4-day week, it was still really slow. There was only 14 valid trades across those 4 days, and the importance of defining your system is so that you absolutely know that. It's not like you're just guessing. It's not your intuition. It's not your gut telling you, oh, it feels like it's been slow, right? No, I can tell you statistically that it's been slow for what I trade, and that's fine. What's not fine, and this is what I wanted to get into today, what is absolutely not fine is knowing that it's slow and then getting bored and starting to veer outside of your lane, right? Everybody needs to know their lane. You need to know what it is that is your business plan. When I say business plan, it's because you should treat trading like a business, right? I know what it is that's my business plan, and just because I see some other trader on Twitter or whatever posting a big P&L, maybe I own a restaurant and he owns a sports store, right? Just because I see the guy that owns the sports store killing it right now doesn't mean me, the restaurateur, I don't even know, the restaurant owner, I don't all of a sudden say, dude, I probably should start selling basketballs. It doesn't work that way. So when it gets slow, the most dangerous thing to do is to start just getting curious and drifting outside of your lane. Because what's going to most likely happen is you're going to piss away P&L, you're going to take paper cuts, and you're going to lose capital that didn't need to be lost, so that when it does come back to your market and things are firing, one, maybe your account has dwindled quite a bit, but also not just that, but your mental capital. You're just going to get yourself into a negative mindset where you're upset about the fact that you knew better, you shouldn't have taken these trades. So the only way to know these things is to define your system. And you're going to hear me say this week after week after week because it's so important. If you haven't defined what it is you do, if you haven't written out your business plan, if you can't tell somebody the 15-second elevator pitch about what it is you trade, then when it gets slow, you won't even know it. It's going to be like maybe you kind of sense it. Maybe it's, like I said, that gut feeling, but you're not going to know. You're not going to have the numbers to tell you. dude, I've got the largest data set on what it is I trade out of anybody I know. And I still, every single day at the end of the day, I still track data on my setups. Why? So I know when we start to slow down. So I know if it starts to not work. So I know if something changes and one nuance of that setup is working better than another, right? The only way to do that is to be proactive and put in the work and do the stuff that is behind the scenes that people don't see, right? The actual work happens when the market's closed, guys. When the market's open, you're not supposed to be doing the work then. You're supposed to be just executing. The only way to do that is if you define everything. And the only way to know if the market that we're in is slow for your business is to define every single part of it and to track it. And so, by tracking the data, one of the cool things that it does is it gives me the conviction and the confidence to sit on my hands and know, don't worry, your market will return. It's okay. It's not earnings season right now. As soon as the next earnings season starts, I'm assuming my market is gonna come back before next earnings season. It's just been really slow right now for that price discovery phase of the morning and getting these big emotional, whether it's capitulation or blow off moves into these levels for the names I trade, and that's fine. And the only way I can say that with a smile on my face and be okay is because I have the data. I know my market's coming back. And when it does, I'm not going to be, walking around on crutches or wearing like a head wrap from stupid injuries I caught trading stuff that's not my business plan. So I cannot stress the importance, guys, of knowing your market, knowing your business, and sitting on your hands when it's not your business, right? And not getting upset when you see whatever trader it is on Twitter or Instagram boasting about their P&L because the market's hot for them right now. There's a ton of traders right now that are swing or position long only traders. They don't even short. How do you think they feel right now, right? It's been a bear market for the last few months. And the best traders I know that are those type of traders have been yelling at the top of their lungs. Sit on your hands, wait for the market to get healthy again, wait for your market to return. Because there's going to be a lot of opportunities when it does, but you won't be able to capitalize on them if you screwed everything up in the meantime, right? Got to protect your mental capital and you got to protect your actual financial capital. So define your system, track the data, and acknowledge when it's slow for yourself and sit on your damn hands. I actually took a day off last week because I just knew it was just, the market was really slow. It was Thursday. I didn't trade on Thursday. There was no point. And I came back to the market at the end of the day to track my data, and literally I missed nothing. I was like, dude, it was the best day ever to take off. It was the best decision I made. I wasn't tempted by seeing, and that's another thing, guys. Have things to do outside of the market that are not market related to do when the market is slow for yourself. Go golf, go to the gym, get a hobby, volunteer, do something good. Go be a service to somebody else. Do something productive with your day when it's not your market. Because by and large, if it's not, and you sit in front of your screens all day, we have this stupid human monkey brain inside between our ears that will undoubtedly get us into trouble, or at least try to get us into trouble, right? You got to be actually pretty good at having some willpower and self-control to not hit the button when you know that there's nothing there, right? And I talk to a lot of traders that say, oh man, I know I trade really well, especially guys in TrueTrader, right? So if you guys aren't in TrueTrader, you might not understand this, but we specialize, one of the things we specialize in is trading that opening 30 minutes of price discovery. And I know a lot of guys, I hear them say, man, sometimes when I don't have any trades in the first 30 minutes, as soon as that 30 minutes is up, that's when that little voice in the back of your head kicks in and starts trying to play around with the what ifs. Oh, what if I just, right? And you know what you always do is if you take one of those trades, you're just taking a B-, C+ trade, at least for the setups we're trading. And that's a constant battle. Find ways to identify when you're hearing that voice, right? Red flags, those are important things. You need to keep post-it notes on your desk. Red flags, when I hear the voice in the back of my head say this, that's it. turn the computer off, get up and go for a 15-minute walk, whatever it takes, right? But when it's slow, sitting on your hands can oftentimes be the very best decision to make. All right, and that's all I really wanted to talk about, guys. And just remember, keep it full circle with what we constantly talk about on these Sunday preps is you can't do that. You will never be able to say with statistical numbers to back your claims up that the market's slow for your setup if you don't define it and you don't track the data. So make sure you guys understand that's really the crux of everything. All right, guys, neither I, TrueTrader, or any of our representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing that I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only. All right, guys, let's get into it. So here is your ES chart. All right, so we talked about this last week. You get sold off from the 20-day, and it gets extended so far. It's like a rubber band just stretching, right? You have to assume sooner or later that rubber band's going to snap and you're going to get the rally. And that's, guys, make sure you understand that that's no different in a bull market, right? We get extended to the upside and that rubber band snaps and we snap back to the 20-day. So, that's just, if you haven't seen the talk I did on balance versus imbalance, go back and watch that. That was, that really pertains to this, what I'm talking about right now, right? So we got the rally. It didn't quite get back to the 20-day. Let's jump into the weekly chart real quick. And yes, it did come from an area where, we could say, okay, this is an area of interest, and we get the bounce. We're right back up in the levels of resistance, right? And until a lot of other things happen, like we've talked about before, where the domino effect of time frames falling, this for me is still just like any other rally, back up into resistance until something changes, right? So basically the question here becomes what happened. It's not about the push into the 20-day, it's about what happens after, right? So, and if we push a little higher, I don't care. First area of interest, right, is going to be this, let's just call it 4,000, okay? Because we're working with ranges here. I'm not working with exact levels to the penny. I don't care about that. The 20-day all the way up to 4,000 is going to be the first little area of resistance I'm looking at. Then you got the monthly pivot right up there around the 50-day. And it's also, if we draw a line right here, right, you'll see this is where that continuation lower happened from, right? Push up, lower high, lower low, and then we just went straight down. So that's definitely an area of interest for resistance as far as where I'm going to look for short ideas. Any kind of emotional moves up into these levels. So 20-day into 4,000 is the first area. Above that is going to be the 50-day slash that short continuation lower. Now, the other side of that is if we attempt to come lower, do we end up putting in a higher low, or do we just continue to head down and hold this 20-day trend lower? So far, the daily chart has been very, very much in control. All the pushes back up into the 20-day, not just the daily, I would say the weekly as well, when the weekly does resolve back up to the 20. The last major push did not quite get there. That's not the biggest deal. The big push up here did. And so right now, my way of analyzing something like this is that the pushes into the 20-day are where we are finding the resistance and where we are finding sellers and where we are rolling back over and then continuing trend. So the question always becomes the next attempt to go lower. Do we go lower because that's how trends continue? Obviously, we can't continue lower until we break lows. Or do we make a higher low and do the bulls try to make a stand? And either way, we're going to have plans for all scenarios, right? Contingency plans. So obviously, this 3780-ish area is going to be some support area. You got the quarterly down there. And let me jump into an intraday time frame real quick just to show you guys something. This is a 120-minute chart. And another thing that, if you guys don't understand this, please consider joining TrueTrader just so you can, at the very least, learn how to read what the author is writing, okay? Time frames fall in sequential order, right? I could keep zooming in. We could go to a 1-minute chart and we could identify where this trend actually reversed. But this 120-minute chart does a great job of at least just illustrating this real quick. And that is, right here was where you had your failed breakdown. What happens after the failed breakdown is we push straight up into the 120-minute 20. We make a lower high and then this lower low here. This right here, this push down, should have been, if this was going to continue lower, should have been where we headed lower from. When it did not, back above this level became your long trigger. And not only that, but you got a retest of it too, right? So this level here where that long trigger occurred becomes a very important level to me moving forward. So I'm going to just draw this out. Whoops. Let me draw this out a little bit further here. There we go. And so let's just call it 3,700, right? Retest at 3,700, going to be very important for me. Obviously, we have levels down here. 3,640 is the low lows, the rut row level as we call it. But any retest of this 3,700 level, I'm going to be looking for that to be the level where the bulls make a stand. I mean, we can continue the way this trend unfolded, right? So we're pushing up, higher low, push up, failed breakdown right here, higher low. This is an important level right here. Okay, it's another important level. So retest of that probably going to be and it's funny the way this works, right? Look at these two levels we just drew. What are they? They're round psychological levels, 3,700 and 3,800. All right, so those are good support levels in terms of where I'd be interested when the bulls attempt to make their stand. And this all, remember, this all circles back to the concept of when we try to come lower, do we make a higher low or do we actually head lower? Because so far right now we're pushing back up into the 20-day, which so far has been holding trend, right? And I'll show you some other things in the next chart, which is the NQ. We'll just get into it right now. And this is something I want to highlight using the NQ chart. So the same concept of what we were just talking about applies to the NQ. Now, remember last week we talked about the fact that the S&P actually had sold off quite a bit more from the 20-day than the NASDAQ. And so now we're looking at it. Remember, S&P has not reached the 20-day yet, but the NASDAQ did, right? The NASDAQ on that rally on Friday got there. We got through. When we push into the 20-day, I don't care if we stuff the 20-day or if we go through. It's not about like, does it stop on a dime at that moving average? That you guys need to really understand that doesn't matter at all. Look at the last rally. The last rally went through the 20-day, right? But it doesn't matter. It's not about holding that moving average to the T. It's about what happens after you push into it. And what happened? We pushed up, lower high, lower low, just like we looked at on the S&P. Let's go back to the ES real quick just to show that, right? Right here, we went through the 20-day. If you guys don't remember, right? It didn't matter. I mean, this is just, it's still the same rally. It's still the same trend holding, but we're still pushing up into a higher time frame trend that is in a downtrend. And once we did find the resistance, it was lower high, lower low, and then new lows. So apply that same concept to the NQ. Same thing happened here. And just because we're through the 20-day doesn't mean jack to me, right? If we push even to the 50-day, it's still considered the first push into the 20-day for me, okay? What I'm looking for is when we attempt to make the push lower, do we make a higher low or do we head lower? And the only way to go lower is to get a continuation trigger, which we got here and we may get here. It may happen at the 50-day. It may happen up here. I don't know, right? But all we're going to do right now is identify levels of interest and then watch the price action unfold. For all I know, we gap down tomorrow and this becomes the high of the rally. I don't know. Like, I don't have a crystal ball. I don't need one. I just read trends. So until this trend tries to reverse back lower via lower high and a lower low, just like we had here, let's actually, just to try to make Benito happy, I'm going to use the highlighter. All right, so here's your low or your high, push down, right? Low, lower high, and then the break of this level, and we went lower, right? That's a continuation trigger down. Will we see that here? Will we get a push up into this level, lower high, and then boom? When this happens, what I'm interested is, do we head lower or do we put in a higher low? And I'm going to try to get rid of all these highlighters now. Thanks, Benito. Again, so let's identify the levels that we're going to play this off this coming week, and then we'll make our plans. Okay, so obviously resistance. Where was that breakdown from? It was right here. Okay, this, I don't care if this holds to a T. This whole area in here, you got the 50-day, the monthly pivot, this breakdown level, all of that. That's any kind of emotional move up into those levels. I'm looking for shorts. Okay, as in terms of where this reversed from. Okay, here's your push down. Remember, we just made new lows, so tried to break down, couldn't. Push up into the 120-minute 20, higher low, and then we were off. This is a level of interest, okay? Look, and just like the S&P, what? It was retested. Remember that, okay? Here you go. Nice little setup right here. Push in down into the 120-minute 20. Little higher low. This level. Whoops, if I could draw. This level was a continuation long trigger. So those are levels that I'm going to be watching for on dips to see if the bulls defend, okay? Very simple. All right, moving on to Bitcoin. Guys, this one, again, I don't care that it held some important levels. The only thing that could possibly happen in terms of this trend at this time where we are at right now is a possible rally up into the 20-day, okay? And remember, definitely have this looming level 2 where the major breakdown happened from, right? So any kind of rally up into here is just a rally into a downtrend, right? So, I mean, if you guys don't understand downtrends and you're only like a bullish trader, flip something upside down. It would be a pullback, so possibly put it in a higher low, right? That would be the pullback you would buy. Since this is in a downtrend, that would be the pop that you short, okay? Again, I don't trade Bitcoin or cryptos. I follow them so I know what's going on in that market because I trade equities that are crypto related, right? I know I sound like a broken record saying that, but I trade a lot of coin. I trade coin all the time, Coinbase. Mara and Riot, I used to trade a lot more when they were higher priced. But still, I need to know what's going on. So in terms of trend, that's the only thing you have. Once it pushes into the 20-day or rallies up into these levels, again, just like the broader market in the S&P and the NASDAQ, I'd be looking to see when they try to head lower, do they make a higher low? Or do we just head lower? And that's all there is to it, guys. All right, so let me get a drink of water, and then we're going to do the sector analysis. All right, guys. Let's get these ETFs up. Let's head over to barchart.com real quick. We'll go look at the stock market matrix. Sounds so cool, right? The matrix. Here we go. All right. Obviously, lots of green on the screen. Makes a lot of sense, right? We had the big rally. So the one thing that sticks out, right, is energy was still really heavy. They were selling it off again last week. And same with oil. In terms of everything was strong. So when everything's strong, I like to identify a few things, right? I like to identify the things that were the strongest, but I also like to look at things that and say, even in a strong market, that had relative weakness, right? So that would be industrials and materials. Now remember, I don't really trade those that often because there's not a lot of individual names in those sectors that I like. But it's definitely a concept that you should apply on a daily basis when you're doing these screens to try to find stocks to trade. If the market's ripping and there's like a sector where it's just really lagging, that's relative weakness, and it happens to be a sector you do have individual names you trade, you should have a light bulb and go, oh, I might be able to find some trades in there, right? Because what happens to something that was weak in a strong market if all of a sudden that market rolls over the next day, right? You might have a short op. Or what if the whole market's red, I mean dark red, and there's just one thing that just, maybe it's red, but it's just barely red, right? It means it's holding strong, it's relative strength. So that gives you that, maybe I can find a trade in here because the market was getting crushed and this thing was just holding strong. So that's why we do that, guys. So let's peel back the layers, look under the hood. Let's go check out these ETFs. So XRT, just go right down the list, okay? Now, the first thing about XRT is we talked about this a few weeks ago, was we were talking about the fact that it could be put in a higher low. And then it had that, it was not last week, but the week before, had that really big sell-off. And we were like, dude, I mean, when you look for a higher low, you would prefer it to be not so dramatic. And it sold off so far that we were kind of like, God, man, it even closed under the weekly 200. But it never lost the lows, right? Keep that in mind, guys. It never lost this 58 level, okay? And if it doesn't lose the 58 level, no matter how ugly you think it looks, this can still end up being a higher low, right? This can still do this and head back up to your weekly 20. You know, we don't get to dictate if the chart is going to look textbook or if it's going to look sloppy. It still could be a higher low, and I just wanted to point that out because as bearish as it may have looked 2 weeks ago, last week was a pretty convincing rally. You're going to see that across the board, right? All the sectors had pretty big rallies for the most part, but it still hasn't, you know, gotten over this level it needs to get over. So really, it needs to clear pretty much 68. We'll call it 68. Basically, the high from this big green candle here. We'll just draw it, okay? So everything in between is kind of noise. I mean, you could fade an emotional spike into 68. You might have individual names from the retail sector that are getting extended. And if you get a rip up into the 68 level, maybe you fade. But if we clear it, right, then we have confirmed the higher low. And I wouldn't want to step in front of it, right? I might look to be patient for that weekly 20 push. If we flush from here, I may look to play longs against these lows. There's a whole different variety of playing these, but keep in mind, under these lows here, and I think we could get another leg down, over these highs here, and we might be pushing into the weekly 20. And so, you know, in between those levels, you can play them kind of like a channel, above or below, and you might want to be patient for extensions. XLF, this one triggered, right? This is already triggered. Where's Benito's highlighter? I'm going to use the circle. We're going to try this, okay? Oh yeah, I like that. The circle tool. You guys think I don't learn? I learn all the time, new things. All right. All right. It's hard to kind of see because they're so close together, right? But you get the pullback, the push up, the higher low, and then the trigger was over the highs from 3 weeks ago. Okay. What's the target on that? It's the 20-day. So this is already triggered. I would be looking. This is just like we were talking about on XRT, except this one has triggered, right? This one needs to get over these highs up here to really get going. Whereas XLF has already triggered, and I would, you know, now I would not be a buyer up here. Why? Because we're already going into this major breakdown level right here, and I don't know if we stuff here and retest some levels. Even though the target is the 20-day up here, I'd be wanting to, if I'm trying to get long, I'm trying to buy it on flushes back into support, okay? And remember, we're looking at sectors just to see, are there opportunities there? Yes, I think the financial sector has opportunities on flushes back into support. Again, like I said with XRT, if XRT were to clear these levels up here, I wouldn't be stepping in front of the short. I'd be being patient for extension into the target. And same with XLF, right? Even since it's triggered, if I am going to short it, I'm going to be patient for extension up into the 20-day. That's just how it is. All right. Real estate. Again, now this one triggered. This one's trigger and target. This one has resolved where XLF, right, has room back to the target. XLRE is at the target. You get the trigger straight to the 20-day at the target. When we get extended like that, look at this 3 days of just straight up right into a target. If there were names in this sector that I traded, I would be looking at this sector for short opportunities because it just rips straight up into these levels. Is it guaranteed to stuff right here? No. You might get a push a little higher in this 43 area, but I like it here. You know, I may look for opportunities in this area. If you know, I typically don't trade the real estate sector, but if you did and there were individual names you liked here, this is a good spot to be hunting for fades. XLV, another one where now we're getting extended. We're almost up into that 50-day. And remember how we were kind of looking at XLV as similar to XLF back here, right? Back in when we'd been in this, you know, holding, all the dips were still holding, and then we reclaimed, and then we really flushed. And the first big push back up into these levels was a great short opportunity. Well, XLV looks just like that right now, right? We finally lost a really, really major level here, this purple shaded area. And this is that first big rally back into resistance, right? So, you know, this is a sector where, again, just kind of like the real estate sector, I would be kind of looking for names to fade. Now, the problem with this sector is there's a lot of overlap, right? This is healthcare. There's a lot of overlap with this and biotech, right? So keep in mind, wait till we get to the biotech sector. Remember this, okay? Because there's a reason why I'm not going to be gung-ho on shorting everything in healthcare, okay? Materials. Remember, this is the one that had relative weakness. It's still kind of oversold, but I still think any pushes back up into this mid 78 area is good for a fade. Again, it was very lagging, right? The whole market was rallying, and this one hardly rallied. Same with this one. Industrials and materials were the two that we said were the relative weakness. So again, now this one's triggered. If it were to rally up into this annual pivot / 20-day, I would be looking to fade names in this sector. Again, not a sector that I typically trade. Okay, not a lot of individual names in here that I like. Utilities. Utilities is getting extended, right? We're up into the 200-day. Any push up into this 20-day is going to be something that I'm looking at fading. Look at this level. This was that really key level from way back that, you know, we could never get above. And when we finally got above it, retest, it held, and then, you know, bear market did its thing, and we cracked and we lost it. Now we're back below that really key level. First major push up into the underside of that. And imagine if it happens on Monday, right? We've just had 4 days in a row of just straight up. Imagine Monday we gap up and rip, and we're up into these high 70s. That to me is telling me this is not sustainable. This move is right into resistance. We're getting extended. I'm going to be looking for fades in this sector. All right. Consumer staples, another one. Lost major level. Finally made these new lows here. You know, this is another one that's pushing right up into levels where I think you're going to have some good shorts. Anything into the 200-day / monthly pivot and a retest of that very long-term trend, right, that we had lost. Up in that, let's just call it 74. I'm going to be looking for fades in the staples. Discretionary. What did I write down on this one? Rally in the 50-day for fades is what I got. I don't know if it gets there. That's what I wrote, right? It's funny because I read like a few words from what I wrote down, and my brain automatically kicks in the rest. Like what I wrote was, I don't know if we get here. This 20-day may be it. So I'll be looking to see come early this week, is this where we stuff, or do we get that a little bit further of a push up into the 50-day? But the 50-day would be great for if I am looking for shorts in that sector. Communications. Another one where the 20-day looks great, the 50-day looks a little bit better, right? It's not really extended. The rally wasn't that crazy. Another, you know, one though that is showing a bit of relative weakness, and it's to be expected. We've talked nonstop about how weak communications has been. All right, so here's the biotechs. This is why I'm not gung-ho to fade healthcare names, because the bios are finally starting to show some strength and rally up into this weekly 20. It's not there yet. Now, if we push into that level, well, I better lower that to the right spot. Get there, please. All right. If we push up into that level, you may find resistance in the bios. I'd rather focus on the names that are more of like the CVS's and the Walgreens. Remember, Walgreens has earnings, I believe Thursday, or you guys can check it for me. It's fine. But I know it's this week. Walgreens has earnings. But the names that are not bios, but that are still part of that healthcare industry, those are the names I'd rather look at than the bios. Because the bios, I really feel like we are starting to see, you know, look at the volume growing. The volume's been just trending up, right? And we're starting to rally from a very, very oversold position. When you start to like look at how far certain sectors have come down, biotechs they take the cake right now. Caveat: biotechs also benefited the most during COVID in the 2020 run. This got way overdone, right? But I think the sell-off got overdone as well. And we'll just leave it at that. Tech, I'm thinking, again, into the 20, maybe we get to 50. I'm looking for fades on things that are extended. Do I think we've bottomed near term? I don't care. I hear this question a lot, right? Like, where is the bottom? When will this bear market end? That's not what our job is. I'm not here to call bottoms. I'm here to take day-to-day advantages when I trade, and I need to know what things are extended and what things aren't, right? What matters is the trend. And if on all higher time frames, right? Like if we look at the weekly, the monthly, we're still making lower highs and lower lows. You'll know when the bear market's over because the higher time frames, like the weeklies and the monthlies, are going to base and then start to make higher lows and start to push from healthy consolidations, not this lower high, lower low. And one of the things I forgot to mention when we were talking about the ES and NASDAQ, and this is reminding me of it, is, in fact, let me go back real quick because I do want to make this point, guys. I don't believe, you guys see how wide these weekly candles are? The range has just been nuts. The volatility is still really, really high. Like, if you look at the way the bull market was, we weren't getting week after week after week of these kinds of candles, right? Maybe back now, like if you look at COVID, we did, right? I don't think that we are going to bottom when the volatility is this high. I think the volatility needs to compress. I think we need to see a narrowing of the range and some healthy consolidation, some compression before any sort of moves can be digested. Right now, it's just like manic, like crazy, like psychotic range, just both ways, in both directions. It's such a great market for traders. It's such a terrible market for any sort of looking for a market to gain its composure. The market, in my opinion, is going to benefit from some healthy consolidation. And when you see like the range on these weekly candles, week after week after week, that to me is telling me that it's gonna, until that ends, until we start to see the price action, the range narrowing, that we're not at the bottom yet. I think we still have a little bit too much volatility in there, and that the XLK ETF was like the reminder there, which it looks just like NASDAQ, right? These big wide ranging candles. I think we need to narrow that, and then maybe we can find some consolidation, some compression, and maybe then look for a trend reversal. And until then, right, we stick with the trend that's in control. We don't fight the path of least resistance, which at the moment is down. Energy and oil. Okay, let's look at these real quick. They've really come down. They're back into levels where, granted, right here, even though we broke these lows here, I still think we held really well. I think we reclaimed it, never got a close below here on the weekly. I think I'm looking for longs in these sectors, as long as we don't lose last week's lows, at least in energy. Let me check out the oil real quick. No, oil on the other hand, I made a note. I'd like to see, I don't know if we get there, what I would like to see, what's on my Santa's wish list. Hey, Santa, can I get the weekly 50, this 111 area on oil? That would be where I'm looking to buy. And if we draw this trend line straight up here, we'll just continue it up. It's going to be close to in line with that, right? So I don't know if we get it, but if we do, that's where I'm looking to be scooping names in that sector. All right, so let's get into the individual ideas. I'll go back to the main list. Let's go back to a daily chart. We're going to start with the long setup, strong stocks. I'm looking for continuation. First one on the list. Oh, and I do want to point something out. Week after week after week, a lot of the names that are on my strong stocks looking for continuation, I make the point to point out to you guys, look, this chart is trading near the 52-week highs, right? We're in a bear market. What tells you strength more than being close to 52-week highs in a bear market? I mean, it's a no-brainer, right? But the truth is, the longer the bear market lasts, the less and less names are going to be trading close to 52-week highs, right? And if we were going into our screeners here, let me see if I can pull this up. You know, Strength Hunter here is one of my things that I look for, where I come down here and I'll just do 0 to 10% below the high, right? Look at this. There's 5 names here, guys, and trust me, I'm not really interested in any of them. So does that mean I'm not gonna have long ideas? No, there's plenty. But what is the other way to look for longs when the markets have been in a bear market and everything is close to their lows? Well, I like, just like we just talked about with the broader market, right? Some consolidation, some basing, some higher lows, and some nice sideways action, and then pushing, right? Well, I have a screener for that as well, and I'm not, listen, you guys can have it for free. I don't care. This is, where are we at? Curling off the bottom, okay? Super simple, okay? I want volume, liquidity, over 2 million, price above the 20, 10% or more above the lows, okay? But I want the price above the 20 SMA, because that shows me that it's reclaimed and some strength. And look, now you have 133 names, and we can go through this. And what do? Well, I'm looking for names that have these consolidation patterns near the lows and are showing some nice price action. And that's where I pull a lot of these ideas from. So it's not like, you know, yes, I would love to find names that are trading near 52-week highs. But, dude, if this bear market goes on for 2-3 more months, guess what? Not going to be a lot of things trading near 52-week highs, okay? Unless it's like inverse things. So this is a screener I use to find names, and that's where I got quite a few of these. You'll see the pattern I'm talking about when we go through these names, right? So the first name on my list is RBLX, and it was on my list a few weeks back. I don't remember which week, but it was basically why? Because we put in this push into the 20-day, pull back, and we were curling. So what I needed to see was a break over 36. Well, guess what? We got it. Now, do I want to buy Roblox because it triggered? Hell no. Look how extended this is, right? But I am very interested in it on dips. And you got to keep in mind too, these aren't swing trades per se. Some of them could become them if you put a day trade on with a portion that you leave a runner on, and you close strong, you lock in profits, and you got some cushion. But I got to come up with ideas for my day trades as well, because that's how I make money every single day, is looking for names that are behaving a certain way and trying to have high probability of a trade working for me. Let's see, what was the level? Flush down to Friday's low a day. If that doesn't work, I wrote down I'm going to keep it on watch for 33.80 to 34. Let's look at, here we go. So you'll notice Friday's low a day was right into Thursday's high day, right? So, and then not only that, but that's where we reversed from after the big sell-off. So you get the, we talk about this all the time, failed breakdown right here. We broke these lows, failed breakdown, push up, higher low, even a nice little curl right there, and then we went, okay? So this 35 area is very, very interesting to me. If it doesn't work, you have this trend line here lining up perfectly with this level here, 33.80. Let me draw this for you guys. So that was the level where this push stuffed, and then we reclaimed it and held, okay? So I really like that 34 to 33.80 area as well, and that's on Roblox. In order for me to take these trades, guys, it's got to flush down to these levels emotionally. If we just drip down there, I'm not interested, unless I then see something else happen afterwards, right? But if we flush emotionally, I'm going to be there for the bounce plays. And I have defined targets on these setups. If you guys don't understand them, You need to be part of a TrueTrader because that's where I talk about those things. I'm giving you guys ideas here. I will be buying an emotional flush on Roblox. Now, if we gap down, if we open, 35.50, I'm not buying a 50-cent flush, okay? I'm not. My plan will adjust down to this 34, 33.80 area if we were to gap down. So make sure you also understand that gap ups or gap downs sometimes change my plans. I don't know where the market's going to open, and I don't care. I'll come to the market Monday morning and see where all my ideas are trading, and I'll adjust if I have to, okay? Sorry, guys. Getting that parched. Next idea on this list is Potato. Guys, we've been talking about the China names. They've been looking so good. This is, just look at this price action, right? We talked about it when it triggered here. I believe PDD was a monthly trigger as well, if we look. Yeah, you guys see this trigger here on the monthly. We talked about this weeks and weeks ago, okay? Now it's behaving good. That's the other thing is understand something, guys. Just because something triggers and then it goes, you don't just take it off watch. You got to keep an eye on it and see what's happening here. So you get the push up, pull back, higher low, broke right here, higher, and then it's off. Now look what happened on Friday. Dip back into levels, soak back up. We were right back up at the highs. This looks like it's ready to go higher. Obviously China is very gappy, right? Like if you trade these names, you'll understand, like a lot of times you have one idea on it and the idea is completely negated by a gap up or gap down. So we won't know until tomorrow. But I'm looking for 64.50. Let's look into a intraday here. 64.50 becomes kind of the same area as what got me interested in Roblox, right? So you can see, draw this line straight across. This pullback here is what held, that created this long trigger here on the intraday. Okay, so consolidate, fail breakdown, higher low. This break of 65 is what sent it. I want to see a retest of 64.50. If it doesn't hold, I'll revisit it 62, 62.20, whatever. Again, guys, make sure you also understand that it's good to have a next level, right? Because just because something doesn't work at the first spot you anticipate, you don't want to take it off your watch, because if it were to continue to stay heavy and unwind and stay emotional, anywhere down in these 62 areas would be an area where I would be interested. All right, the next idea is another Chinese name, guys. Billy. Look at this, same thing, man. Just nice consolidation, just grinding higher. I'm looking for any kind of flush down into 26 on Billy. Actually 25.40 to 25.70 is what I wrote down. Let's peer into it and see where those levels come from. Monthly pivot, yeah. So here's the other thing. You see the alert at 26. That's to get my interest ahead of time, guys. I'm not trying to set the alert right at the level I want, and then by the time I pull the chart up, it's too late. I want to be alerted at 26, just in front of 26. I'm looking for 25.70 down to 25.40ish. You guys can see test. Look at test. Below it, get above it, test. Flush down there emotionally, I'm there. And if you look at the ATR, it puts us right down that same level as well, right? $2.14 ATR. It's gonna put us right down into those areas. All right, last name on this list is ZM, and it was on the list, I believe, last week as well. I think it's still behaving well, right? Like, why should I take it off my watch if it's behaving well? I'm looking for 115 to get involved. Let's see here. Yeah, just basically that turn from Thursday. That's the level I like. Feel like it's had plenty of price action there, and it also, again, stems from the ATR. The ATR, I believe, is about 7 points on this name. Let's look. Yeah, almost 7 points. So I'm looking for basically a full ATR retrace right back into those levels, and you can see right here on the daily too. It's just been an important level. Above it, test. Get below it, test from below, held. Test from below it, held. So any kind of 115 area flush, I'm looking to scoop ZM. Oversold reversion setups. This is the next section for longs, right? So These are names that have sold off so much that I'm looking for a bounce play on them. CNQ is the only one. And remember, let's see. CNQ, what did I write down? Something about the weekly chart, I made a note. Yeah, the 50 days right there. And it's going to line up pretty well with where this bounce happened from. So I'm looking for this 47, what is it, 47.50-ish? Yeah, right around 47.60 to 48. Any kind of flush, I want a little bit lower on CNQ. Remember, it's going to be oil and energy, right? So in order to get down there, hopefully oil is going to give us that flush down to the weekly 50, just like we're looking for here. And energy be a little bit heavy right off the open. We might be able to get that flush down here and get those scoops. We'll see. Again, this one may hold here. That's the other note I made is like, you know, this is a pretty important level as well. You got the annual pivot, the 200-day. It may hold here. We may never see those levels, but I just want to have it on my list in case. But you also got the quarterly pivot right there as well, 48.17. And that's it. I don't have any other oversold reversion setups I'm looking for, guys. The rest are going to be short setups. Now, remember what I said about I don't typically trade real estate names, but I really thought that XLRE is screaming for fades. I've got a name I'm looking at for a possible fade, guys, and it's in this sector. It's PLD. I'm looking for 125 quarterly pivot. We've been straight up. It's about, I think, 11 or 12% straight up for a few days. Yeah, 11% without any sort of real retrace. Any kind of more extension up into this 125 area, which is a psychological level as well. I'm going to be looking to fade PLD, and it does have. Look, it trades 4 million. Traded 4 million shares on Friday. Average volume is 6, so it trades. It's liquid enough, and the range, right? So range is $4.72. Maybe 25 is a little too close. I'm not looking to catch the top of it. I'll be looking to see do we get up there? And 2, do we start to exhaust? But I'm looking to fade PLD. Whoops. All right. Next idea is DUK. Surprise, surprise. We talked about this sector getting extended. We're into the 200-day. Anything into the 20-day on utilities, and I'm looking to fade names. So why on earth would Duke be on my list? Oh, because Duke is a utility. Guys, this is really, I can't stress this enough, how important it is to keep shit simple. The simpler you keep it, the better you're going to do. The more complicated you try to make this, the more you're just going to like beat your head against the wall. Anything into this 105, 106 area, I'm going to be looking to fade. It might get a little bit through. You guys can see there was this important level up here, right? Let's just draw this straight across. Oh. Dude, it got rid of my, let me see if it's on the weekly. Why did it do that? Sometimes TradingView is annoying. The way it'll just get rid of your levels. Anyway, yeah, we might get a little bit through it. That's the weekly 20 up there as well. Weekly 20 should be right about 108. Let's look. Yeah, 108. So I don't mind being patient to see if this stuff's 106.50 to 107, and if it gets through, I'll be right there waiting at the 108 level. But I think Duke is going to be a nice fade if it can get that last little push right up into those levels. All right. Moving last name on this list for weak stocks looking for continuation, RCL. Anything up into, let's see, what did I write? This is not necessarily happening early in the week. I wrote down I want 50, right? You see the quarterly pivot, 49.49. You see the breakdown area right here. Obviously, 50 is a psychological level. Might not get 50, right? But I'll be there. I'll be in this area, waiting patiently. I think we can get there. Look at the volume we had, and we also had the trigger, right? Let's see if I can. Dude, I got to get better at using these circles on TradingView. So we can, whatever. You guys get the point, right? This is a reversal pattern. The higher low triggers. The defined target on this setup is the 20-day. So I'm not going to step in front of a freight train I'm not trying to short this at the annual pivot and the monthly pivot. I see stack pivots. I don't care. I want this at the 20-day even higher. You know, I want a retest of this breakdown level. Flip the chart upside down if you can only long. Look at this. If this were to flush really hard into these levels, that's a no-brainer dip buy for a bounce play for me. Remember, it might not be for you. Define your setups, define your system. But for me, that's a no-brainer, and I'll be there. All right, that's it for weak stocks looking for continuation. Last setup I look for is overbought reversion setups, and there's two names. LI, look at this. Now, the thing about LI, I'm going to point this out right now. Two things, okay? One, it's part of the China basket, and China's got strength. So extra caution on it. But this is getting extended. You know, it's up. Look at this. Over 100% in very short amount of time, okay? Can it go higher? Of course it can go higher. One thing I want to point out is Friday. I tried to fade this Friday, and it held. Even though it was really weak, it closed the gap from Thursday, and then it bounced, and it closed really strong. You see that? So this retest here, and the ability for it to hold and then push back, that is a reset. The price reset. And it's no longer, like, if you just look at a daily chart, you'll be like, oh, it's so extended. It's so extended. Not really. It took a breather. It took a reset and then closed higher. I want this higher. The higher the better. I'm not trying to pick a top. I'm looking for exhaustion. I'm looking for lower highs and something to set my risk against. But I'm 100% interested in it. But the important factor here, okay, so this is perfect example. It did the same thing on Wednesday with Tuesday's price. Wednesday, it looked weak, and then it closed strong, and then the next day, Thursday, it gapped up, okay? So then we did the same thing. We closed that gap, and then we closed strong. If this gaps up, I'm going to be in love with it, right? A gap and go, an extension, I'm in love with it. I will be stalking this for a fade, because when that day comes, when this thing starts to roll back over, like, look, and it's not something that's never happened before either. Look at this. You get these big gap extensions. I mean, be prepared, guys, because these are the A+ setups that if they set up, if this thing gaps and goes and gets extended all crazy, you're going to be kicking yourself for missing it when you see the unwind. And I'm sitting here telling you, you have all the time in the world to prepare for it, okay? So the next idea is XPEV. And the one thing I want to talk about is both of them China names, both of them electric vehicle type sectors. XPEV has not reset. XPEV did not do what LI did. So for that reason alone, XPEV is actually more desirable to me. This thing, I don't care if it stuffs the 200-day, the monthly 20 up here, or if we can get 44 to 45, 46 even. I don't care. Higher the better. But this is getting extended. This is getting extreme. It's going to need to have a breather, and I'm going to be there. This is high on my list. Any sort of gap and push higher is getting really into that A++ setup realm. Okay, so that's it. That's the list, guys. I think there's 10 names. I'm gonna go through the questions real quick. See if I can read them real fast. Hold on. All right. So Calvin, broadly speaking, what's a typical percent gain target on most trades you take? So a lot of the trades that I take, whether it's, Apple, Microsoft, Roblox, 1.5 to 2% is phenomenal. And, but sometimes it's more 2.5, 3%. But, you see a lot of people that flash these like giant 20, 30, 40, 50% bangers on Twitter all the time. And then you got everybody watching that thinking that that's the norm and that's what you should be aiming for. You guys would be so surprised what consistent 1 to 2% gains per day on your total account size can do for you. And like, that's the thing is like, I'm typically risking anywhere between 0.5 to 1% of my account on any A trade, like my normal A trades. And I'm not taking trades unless they're, minimum 2 to 1. Typically I aim for 3 to 1. And the funny thing is, like, and this is no secret, a lot of times I use the 1 minute 20 as my target, right? So if I'm reversing an emotional flush or an emotional spike, I'm taking profits at the 1 minute 20. So, you know, the trade might start out as 3 to 1, and I was risking 0.5% maybe. So if I get my target, I should be making 1.5% on that trade. But, you know, it's a moving target, right? As time goes on, you know, a lot of trades that start out as 3 to 1, 4 to 1. By the time you close that trade, maybe 2 to 1. Plus, you know, I'm not trying to put forth this image of like I don't take losers. In fact, I bat less than 50%, but it's okay because there's a lot of opportunities each and every day, and I know that the numbers, because I take asymmetric trades, those numbers work out. And so, you know, taking 1.5 to 2% on your typical setups is great if you can do so consistently, and if you can, you know, average 1.5 to 2% on your account, average, you go run the numbers on a compounding calculator on any website that offers that, and go and look at whether you have a $30,000 account or a $10,000 account or a $100,000 account or even 500K, right? You have 500K. Go run the numbers on what doing 1% per day compounds to on your account over the course of a year. You'd be really surprised. So I do want to make sure people understand that you guys can't look at Twitter and see people putting out these 50, 60, 100% gains and think that that's the norm and then shoot for that. And what you're going to do is you're going to try to hit a home run every trade. That's not the way to trade, guys. Let me move on to the next question. Jolie, I'm new here. Which day EMA do you use? So I don't use EMAs. I use the 20 SMA on every single time frame. So if you're looking at my daily chart, like right here on XPEV, this white line is the 20 SMA. I don't ever try to tell people that you have to use an SMA over an EMA. Honestly, it's quite the opposite. Do what works for you. But whatever you choose, you got to do it consistently. Don't, like, if you use the 9 EMA and you see me on a Sunday prep showing you a 20 SMA, do not just like run and just scrap the 9 EMA and start using the 20 SMA. Like, you can't do that. Consistency matters in trading, guys. You can't just chase shiny objects. You're always going to see somebody using something new and you're going to want to go try that. You got to figure out what works for you and stick to it and be consistent. Okay, iTrade says, for TT strategy, have you found indexes ETFs work just as well as individual names, or do you prefer to individual names with the strategy? I do not trade the ETFs using it, but if I do from time to time, like when things deserve my attention, such as I think a month or two ago, I don't remember how long ago it was, the natural gas trade, I traded it via BOIL, right? It was a fade that was like an not inverse, it was a levered ETF, but I didn't trade it using the TT strategy. I traded it using what I show you guys almost all the time, which is reading what the authors write, right? Looking for, if you're looking for a short, and something's going higher, then you gotta wait for it to stop making higher highs and higher lows, right? Again, you guys might be like, damn, he just keeps it really simple. He must not know what he's talking about. The people that make things sound complex, they're the ones that are trying to fool you guys. Keep shit simple. All right, let's see. KH says, one sec, these levels you think we're gonna retest lower again on IQ. I don't know what you mean by that, bro. Ignacio says, is there any screener recommend to find day 2 or day 3 gappers? Well, to be honest with you, okay, so one, if you're asking that question, you're probably trying to trade small caps. Listen, we don't talk about small caps on these Sunday preps unless there is like a reason to have a focus on it, because I know there's like an A+ trade coming. Now, that being said, if you're looking to trade day 2, day 3 gappers on small caps, you don't need a screener. You just need to know, okay, something closed strong on day 1, it didn't give back the move, and it just goes like, honestly, look at, I have a list on here that says, where is my list? I used to. Ran previous day, right here. And all I do, and I haven't put anything on it in a while, but like if something runs that day, I'll just throw it on this list, right? And then the next morning, I make sure to check that list. And if those things are gapping up, you don't need a scanner at all for that. Now, if you're talking about in hindsight, so that you can find things that were day 2, day 3 gappers, so that you can collect data on them, then you can go and try Spikeet, which is that company I was showing you. There's a link in the description if you want to try Spikeet. They can help you pull data on historical day 2 or day 3 gappers, but you don't need a screener at all. Now, if you want, like this is TradingView, right? Here's a stock screener, and I can go in here and look at extended hours, and I can change things. I can look at pre-market gaps. This isn't going to tell you if it's day 1 or day 2, but I can look at things gapping, and then look at the daily chart and be able to tell you whether it's a day 1 or day 2. But again, my opinion on screeners for small cap day 1, day 2, or not day 1, day 2, day 3 gappers is that you don't need a screener at all for it. You just need to track what gapped up and had a big day, like what, look at the end of the day, what closed up 50, 60, 70, 80%, put it on your ran previous day list. And the next morning when you wake up, is it gapping up? That's all you have to do. Cage is saying, how you remember all this? This is info overload. My brain gonna explode. I gotta write all this down and watch this stream like 4 more times. And then TrueTrader tried to answer. Let's see. Honestly, like, if that's what, listen, I typically I just kind of would laugh at that statement, but I'm gonna take this a second here to address something that I think is important, and that is, if you think that, right, like anybody watching this, if you think that this seems complicated, or like how do you figure this stuff out? How do you remember this? Whatever. Zoom out, right? Always zoom out, and always start with top down, and work your way down, right? What do we do every Sunday, guys? We start with the broader market. We look at the S&P, we look at the NASDAQ. I look at Bitcoin because you guys would probably kill me if I didn't tell you what I thought about Bitcoin. But we get a bird's eye view of the market, and we ask simple questions. What's the path of least resistance? Are we trending down? Are we trending up? And then we drill down into the sectors. We do a sector analysis, right? Simple. And we ask the same questions about each sector that we ask about the broader market. And then we use those sectors as, is money rotating in? Is money rotating out? And we start to ask questions that can lead us to finding these trade ideas. And then we just use something simple like a stock screener like FinViz. Like, dude, for instance, oversold reversion setups, okay? Something that is oversold and I'm looking for a bounce play is very simple, right? I just want something that has range and volume, and then the RSI is getting to a point where it's pretty oversold. And just because it makes this list here on this screener doesn't mean it's on my thing, right? In fact, there's 8 charts here, right? There's 8 charts. Only one of them was on my list, right? I don't want MO. MO is really oversold, but they had the news, so I'm staying away from that. Maybe DVN could be on there. I'm not gonna throw Dow on, but like, guys, keep shit simple. It may seem complex. It's not. Always zoom out. Always zoom out. Okay, and if you get confused, remember to ask very simple questions like, what is the trend? Are we making higher highs and higher lows, or are we making lower highs and lower lows? Are we extended? How do you know something's extended? For me personally, how far are you away from the 20-day or the 20 SMA? Okay, so look at XPEV. Is this at a level of balance, or are we getting to levels of imbalance? Keep it simple, right? Look how far we are from the 20-day. That is not sustainable. Go and look at this chart and show me another time when we were able to sustain a distance like this from the 20-day. Okay? You keep shit simple. I cannot stress that enough, guys. All right. I think there's a few more questions maybe coming in. Let me read this real fast. Can you explain how so Danimal's like saying, I use basic support and resistance levels, which I get and love. Can you explain what you use the 20 SMA for? I think I just did that, right? Did you guys understand what I just said about XPEV? Because that's what that was, right? Literally, the further you get extended from the 20 SMA on any time frame, the more likely that move is unsustainable, the more extreme it gets, right? So hopefully that answered that question. I'm going to look real quick, just make sure there's no other ones. Oh, thank you, CL. I appreciate that tip, because I've been wanting that. I've been wanting something like that for a different reason, other than for the Sunday prep. But thank you. All right, guys, I'm gonna end it there. I cannot stress this enough, guys. Keep shit simple. If the market's slow for you, sit on your hands. Do not get yourself into trouble. You need to be on the right mind state. You need to have your mental capital. You need to have your financial capital. So when the market comes back, you can kill it. If you guys don't have a system that's fully defined, if you've been looking for a strategy, something that has been tested, has a proven edge, check out TrueTrader.net. Use the YouTube code. I believe it's just YouTube in all caps. I believe you get 25% off. Guys, give us a shot. Even if you don't want to try that one, there's a 5-day trial for $30. Come in, say hi. We'll get you squared away. If not, trade well, stay safe. I'll see you in the markets on Monday, guys. Enjoy the rest of your weekend. I know I'm about to go swim and play